Today, tech stocks are under pressure. The Nifty IT Index has fallen nearly 4%, and major names like Infosys, Wipro, and Coforge are down close to 5%. But here's the important question. Is this panic, or is this structure? Welcome. I'm Thirumurugan Rajendran, and on this channel, we focus on one principle: understanding markets through structure, not noise. This session is strictly for educational purposes. There are no buy or sell recommendations, no targets, and no predictions. We are here to analyze structure calmly and objectively. Let's start with the data. The Nifty IT Index declined roughly 4% intraday. Large-cap IT names fell between 4 and 5%. This is not isolated stock weakness. It is coordinated sector-wide pressure. When an entire sector moves together, it usually indicates structural imbalance rather than random volatility. On the daily time frame, we observed a clear structural shift. First, the price was rejected from the premium zone. Then we saw a break of structure. Previous higher lows were violated. That was followed by a change of character, signaling a shift from bullish continuation to corrective behavior. This is how institutional distribution typically unfolds. Markets move in phases: accumulation, expansion, distribution, markdown. The IT sector appears to be transitioning from distribution into markdown on the daily time frame. This is not emotional selling. This is structural progression. Volume confirms this shift. We observed increased participation in the breakdown candle. Supply absorption intensified as the price lost equilibrium. When volume expands during structural violation, it suggests conviction, not noise. Why IT stocks? The sector is highly exposed to global demand, particularly US markets. Any shift in global tech sentiment, currency dynamics, or macro positioning impacts IT faster than domestic-focused sectors. Add to that institutional sector rotation, and pressure builds quickly. Let's summarize the structural signals. Weak high formation, failure to sustain above the equilibrium, break of structure, change of character, volume confirmation. When these align together, it strengthens the structural narrative. This is not panic. It is not random. It is not purely news-driven. It is a liquidity-driven structural adjustment. Markets often look chaotic until you read them through structure. Currently, the IT sector appears to be in a markdown phase. Price is auctioning lower, searching for value. Until structure stabilizes, volatility remains elevated. Again, this is context, not prediction. In moments like this, emotional reaction is costly. Instead, focus on structure. Identify supply and demand zones. Wait for confirmation before forming a bias. Markets reward discipline. 3 key takeaways. Structure precedes headlines. Premium rejection matters. Volume confirms direction. When you understand these elements, sharp moves become logical. Sharp declines can feel alarming, but structure provides clarity. This is Thirumurugan Rajendran. And remember, understanding markets through structure, not noise. Have also demonstrated a real example using the ITBs ETF, where I personally executed a SIP-based accumulation in my own account for long-term wealth creation purposes. This is an actual order placed by me and is shared purely for educational transparency. This is not a buy, sell, or hold recommendation. Please consult your registered financial advisor before making any investment decisions.